From AAAFx, this is Chris taking a look at the upcoming February 5th trading week. So Monday, we get Fed Chair Powell speaking at a conference. And while that generally can be something that you need to pay attention to, I think the only thing the market's going to care about is whether or not he tries to clarify the last press conference. He sounded, I would I would hesitate to use the word hawkish, but definitely not overly dovish. So if he changes his tune on Monday, that could cause some ripple effects in the market. I don't think that's going to be a big mover, though, typically. ISM Services PMI comes out later in the day at 3 p.m. GMT in the United States. Could be a mover of stocks specifically. I don't know that it's going to move the dollar. We've seen a lot of input from the central bank. Keep in mind, New Zealand has a bank holiday. So once we go through that rollover at the end of the day, very thin conditions, even more so than usual. So make sure that you keep your position protected. We may get massive flips. So early on Tuesday, an interest rate decision coming out of the Australian dollar. This will be interesting because the Aussie dollar is at a part of the chart where it needs to hang on. If it doesn't, things could get bad for the Aussie. So we'll have to pay attention. Not really any change expected. Most of the action is going to be coming from the rate statement more than anything else. We have Canadian Governor Macklem speaking later in the day from Bank of Canada. Probably not an event. Later after that, then we have the Kiwis back on board. No longer a bank holiday on Tuesday, giving out their employment figures that will be specific to the New Zealand dollar, probably not have an effect anywhere else. So we have Wednesday. Wednesday is going to be a very quiet day. The one number that you may want to pay attention to would be the crude oil inventories coming out of the United States. Could have an effect on the oil market if it misses drastically. We'll just have to wait and see how that plays out because oil has had a rough several days in a row. Underneath there, we get the weekly unemployment claims number in the United States, probably going to be watched a little closer than usual. This is a stock moving event, maybe a dollar moving event. But, a lot of this comes down to the fact that the jobs number was gangbusters this past week. So we'll want to see how the forward looking numbers are coming out. RBA Governor Bullish speaks later in the day, probably a non-event considering that the Australians are going to have an interest rate decision earlier in the week anyway. And then finally on Friday, the Canadians round everything out with employment figures. That will be a very localized number for the Canadian dollar, probably not affecting too many other markets. Okay, so let's take a look at some charts. This is the Nasdaq 100. We initially fell during the week, but now at the end of the week, as we've closed, it looks like we are trying to threaten a breakout of the previous week, which would be a very bullish sign, especially considering that technical traders will look at the previous candlestick as a shooting star and suggest that perhaps it was showing signs of exhaustion. That has been turned around quite drastically since then. And therefore, it'll be interesting to see how traders play this going forward. I don't think we've got a situation where you can sell this market. I think any pullback will be looked at as a potential buying opportunity. Gold, as you can see, been very choppy for the week. Did gain some of the losses back on Friday that were so bad after the jobs report. I still think gold is a buy on the dip opportunity anytime you get anywhere remotely close to this $2,000 level. 2,075 above is an area of resistance. We'll see how that plays out. If we can break above there, then the market could go much higher. Euro yen. This is going to be an interesting setup for the week. And a pair that I featured a couple of days ago in the daily analysis. Somewhere around 159, 158.80. There is support. We've pulled back. We've bounced. We ended up forming a hammer on the weekly chart. This, I don't think, has anything to do with the euro. And at this point in time, has everything to do with the Japanese yen. The Japanese yen, of course, going to suffer at the hands of the Bank of Japan and its lack of ability to heighten monetary policy. As long as that's the case, I think you've got a situation where you're buying the dip on pretty much anything yen denominated, but the euro, of course, looking very strong against it. Australian dollar, you can see how that fared on Friday. And with the announcements this week, the Aussie has to save itself. Otherwise, it's going to go to the 0.6350 level. And if it does, that's probably a dollar positive move across the board anyway. If we can turn around and take out the highs at about 66 to 66 and a half, that could send the Aussie up to 69. Perhaps the interest rate decision or the statement may make that happen. We'll have to wait and see. But clearly, there is potential for a big move here this week. The euro looks very much like the Aussie. So earlier in the day, I did Euro CAD daily analysis. We are consolidating here on the daily chart, but it does look a bit soft. I think that's probably going to be true with the longer term. We'll have to wait and see, but a lot of this could come down to oil. And what I found interesting over the uh, last several days is the Canadian dollar has held up under weak oil prices. And the fact that the euro can't take advantage of that against the CAD tells me it probably can't against the US dollar. Dollar yen had a turnaround on Friday that ended up forming a massive hammer. This is a buy on the dip market, has been for months now. I don't see this changing. 152 above is a hard barrier. I don't think we get above there this week, but it is an area we're going to try to get to. Anytime this market falls for a handful of pips, it seems like there's somebody willing to come back in and buy into it. Natural gas continues to look fairly weak. At this point in time, we are dangerously close to the $2 level. I think this is an area where traders continue to um, buy it for support, and we're more or less stuck between the $2 and $3 range. I would say it's probably a chance for value. I'm not a big fan of jumping in with big positions, though, so please keep that in mind if you are going to try to range bound trade it. Crude oil, rough week, as I mentioned earlier. The point of support down here at 68 and then again at 65, I think will hold the market up. So if it drops a few more dollars, I'll probably step in and pick up a position. But it would be a sideways position. You might want to use something like a stochastic oscillator based system or maybe a MACD. I think oil, although oversupplied, it'll be interesting to see how it plays out because I think part of what you're looking at is a market that's whining about the lack of cutting coming from the Federal Reserve. And at the same time, though, it has to worry about geopolitical concerns in the Middle East. There is an oversupply of oil, so I don't think we're going to take off to the upside without some type of geopolitical issue. But really, at this point in time, I think you've got to look at this through the prism of a market that is just simply stuck being range bound. The S&P 500 initially pulled back during the week, only to turn around and show signs of strength, closing at 49.53. I think at this point, 5,000 is a foregone conclusion. Now, how we behave at 5,000 is going to be a completely different question altogether. But I do think that it will have its influence on the markets as a large round figure, and therefore probably makes some sense to perhaps take some profit in that area if you're already long. Short term pullback, I think get bought into, especially near 4,800. That would be a 153-point drop, and that's not easy to do in this market these days. So we'll see if that actually can happen. Clearly an uptrend. Clearly, we're basically at all time highs. I don't see any reason why this changes, at least not yet. We did have a little bit of a scare on Friday as interest rates spiked again, but we turned around and bought right back into it, as you can see. So the British pound continues to go nowhere. This is another chart, much like the Euro CAD that I featured today on the daily analysis, that we're just stuck. And I think that ends up being the theme here until it isn't, quite frankly, that The only way to describe it. 200-week EMA offering resistance, 50-week EMA offering support 1.2850 above, being broken opens up the possibility of a move to the 1.30 level. The 1.26 level being broken below opens up a move to 1.25 and the 50-week EMA. Right now, it just looks like we're trying to find a reason to buy or sell one of these currencies. So the dollar had a really good turnaround against the Swiss franc. I think this is a market that's worth watching. Yes, it's very much in a downtrend, but when you look at the monthly chart, you will notice that we are pressing up against an area that was previous support and it is now acting as resistance. And notice every time we flip past here, this market has turned around to rocket to the upside. The Swiss National Bank's gotten involved in a couple of occasions in the past, and perhaps that's market memory coming into the picture, or perhaps they're stealthily doing it. The S&B is known to come in and interfere in the markets and take credit for it later. It's a small enough currency and central bank that they can get away with that quite easily. So, we'll see how that plays out. So, the euro against the New Zealand dollar initially fell during the week. As you can see, we turned around to show signs of life. It does look to me like the market is trying to do everything it can to find its footing. So this, considering how the euro isn't exactly a strong currency right now, this tells me that the New Zealand dollar is going to continue to weaken in general, probably against most currencies. This does look like a market that is supported by 1.76 and the 50-week EMA. And if we can break above the highs of the previous week, I think this market could go as high as 1.83 given enough time. Over here in the British pound against the Japanese yen, it's more Japanese yen weakness. Remember that British pound chart I showed you with the US dollar going nowhere? Well, it's having no issues against the yen. So I think at the end of the day, the one truism across the market is going to be that the Japanese yen continues to get sold. Keep in mind, this is a risk appetite based currency pair as well. So as risk appetite rises, so does this pair. As it falls, so does this pair. 50-week EMA down near the 178.5 level is your floor. I don't think we get there. I think we end up breaking out to the upside probably this week, but we'll have to wait and see. If the pound does rally against the US dollar on that chart I showed you earlier, it will certainly rally over here. So keep an eye on that. This week could be a little bit lumpy as far as volatility because there's only a couple of things moving the market and they seem to be very specific. Um, to like currencies. For example, there is the Australian interest rate decision. The rate statement may have an effect on some other markets, but that will be somewhat localized. Canadian employment will be somewhat localized, et cetera, et cetera. So might be more or less a slowly trending type of week. It does look like we are trying to go more risk on. So keep that in the back of your mind. That could have a major influence on what happens over the next 5 days. As usual, be cautious with your position sizing and make sure you set stops on all of these setups. Nothing is actually guaranteed in trading. And of course, we do have a lot of geopolitical concerns out there that could rock the market at any given moment. So despite the fact that you should be doing that anyways, as things stand right now, especially with the Middle East, you definitely need to. This has been Chris Lewis from AAAFx taking a look at the upcoming February 5th trading week.